Welcome to Indianomics. It's not often one hears Professor Raghuram Rajan rather than Governor Rajan. We got a glimpse of that last weekend when Rajan spoke at Presidency College, Kolkata, on the history of debt and how debt is a strength and a scourge of modern societies. We'll give you a chunk of that seminal speech. Also, last week, the overarching worry for financial markets was the big fall in commodities, especially crude. More worries lie ahead for markets as the Federal Reserve meets next week to probably finally raise interest rates. Today we speak with one man who has seen previous bouts of global weakness in 1999 as Treasury Secretary to President Clinton and in 2009 as advisor to President Obama. Larry Summers can also be trusted to understand the US Fed better than anyone else. Thank you very much, Dr. Summers, for joining us on CNBC TV 18. Well, actually, this week we have seen some fairly debilitating falls in commodities. Crude down about 6% as we speak, and other commodities as well. Does it look like a denouement that, mines closing down, workers laid off? Is this probably the last leg?
I think it's hard to know. You have the combination of a global economy that looks like it's going to be softer, longer than we would have thought several years, reducing demand. And you also have substantial things going on the supply side to increase supply. Most obviously shale oil in the United States, but there have been a number of improvements in mining technologies and new discoveries. So you put those things together, less demand, more supply, and you're going to get a lower price. And I think that's going to be expected to be with us for some time. Is this the end? I'm not sure that it is. I would be surprised if the average price of oil over the next 5 to 10 years wasn't above the price we're seeing today. But whether this is the end, that's a judgment every investor will have to make for themselves.
Well, actually, a debt crisis that started with the United States in 2008 moved on to Europe towards the end of the last decade, and now it's become a huge emerging market growth issue as well. Does it look, therefore, that 2016, the global economy grows even slower than 2015?
I think the risks are much more on the side of excessively slow growth than they are of excessively rapid growth. I think the risks are more on the side of lowflation and deflation than they are on the side of inflation in most countries. I think the challenge for most developing countries is going to be too little confidence and too much capital outflow rather than too much confidence and too much capital inflow. So it's all a matter of balancing risks, but I would be balancing the risk towards weakness on the supply side and insufficient demand holding back the global economy.
Well, now to come to the most proximate big event that the world is watching out for, the FOMC meeting. You think that there is no case to postpone the rate hike, that because it has been so much awaited, it will come?
I think that so strong a predicate has been laid for a rate increase that it is hard to imagine that it would be prudent to not come forward with a rate increase given the predicate that has been laid. And so I think that central bankers have to act in consistent ways to preserve credibility, and there has been a very clear statement very clear statements pointing towards a rate increase this time, and that in a sense prejudges the issue. I think the question of what the right trajectory is remains one that's very much open to debate. The question of whether a different predicate could have been laid is one that historians and monetary people concerned with policy will look back and try to evaluate. But I think it's pretty clear that given the predicate has been laid, there really isn't a viable alternative.
Actually, the dot chart indicates, I think, 4 rate hikes. The market is penciling in 3 rate hikes if you looked at the Fed funds futures. What's your own estimate what the economy can take?
I think it's much too early to judge that. It has to be judged as we go, and I certainly wouldn't presume to make a forecast at this point. And indeed, there are many issues. You know, does a forecast represent the average of what one thinks is going to happen? Does the forecast represent the mode, that is the thing that one thinks is most likely to happen? These are all issues in looking at the dots and comparing them with the futures and so forth.
Okay. Well, I wanted to know whether you actually dwelt on Raghuram Rajan's domestic policy. We are still, we can boast of an inflation of between 5 and 5.5%, and the fiscal deficit, if you combine the center and the provinces, the states, would still add up to about 7%. So do you think his emphasis on inflation first is right at the current juncture?
I'm not familiar enough with all the details of the Indian economy to comment on the details of monetary policy. I do think India is fortunate to have Raghu Rajan. I think he is a person who's recognized around the world as an extraordinary economic professional, a person who's remarkably thoughtful, a person who's been prescient in some very important respects. And so I would have enormous respect for the monetary policy judgments he would make.
Well, one more region I will have to ask your opinion on, China. What's the sense you're getting that the country will be able to manage a 6.5–7% growth, that it will be successfully be able to transit from an infrastructure-led, investment-led economy into a consumer-led economy?
I think China's got big challenges ahead of it. You saw some of the financial distress they suffered earlier in the year, may be a kind of canary in the coal mine. I think moving from an economy that was so investment-led to an economy that's consumption-led, that's heavy, massive goods like steel, to a more service-oriented economy, from a more export-oriented economy to a more domestic demand-oriented economy. These are all substantial challenges, and it will test the Chinese economic leadership to pull it all off without any meaningful interruption in growth. But they've shown themselves as a cadre, as a group, to be very strong at overcoming adversity over many years now.
Do you think their initiative to have almost a rival IMF in their Asian bank will be a big threat to the IMF? I mean, at the moment it's a very small entity, but
I think it remains to be seen. My hope would be that in responding to any stabilization crisis, if one should arise in the future, there'd be cooperation between all institutions that have the capacity to provide funds.
Okay, but what about within the IMF itself? There seems to be a deadlock with the US not giving up its votes. How might the end game play? There have been issues where the U.S. Congress has not given some necessary approvals, but I think those approvals will come perhaps sometime soon. I would regard myself as guardedly optimistic. I think that it would be welcome if it did happen. A non-European IMF head is possible, you think, the next one, after Christine Lagarde? Oh, who knows? We'll have to see. No, I mean, are the powers shifting? Who knows? We'll have to see. Okay. Well, finally, I mean, let me end where I began. Do you think that, all I'm asking is for the delta. Will 2016 delta-wise be higher than 2015 in terms of consumption and growth? I'm not confident that it will. It may be. I would guess it will be another sluggish year, and I'm not confident which way it will work out in terms of above or below. But I don't think it will be vastly better. But what are the odds that it will be vastly? I wouldn't be surprised if it was worse. All right. On that note, Mr. Summers, thank you very much for joining us on CNBC. Well, key takeaways: commodities can fall further, primarily because of technological developments in the supply of commodities, especially in energy. 2, the Fed is most likely to raise rates, but it is very difficult to guess how much they will do in 2016. Unlikely they will do much. 3, global economy may continue to be as sluggish in 2016 as it was in 2015. In fact, there is a good chance it will be even worse. Those key takeaways from Professor Lawrence Summers, and now from Professor Raghuram Rajan after the break.